Okay, good evening. It's Ken with the Strategy Podcast Nightly for April 9th, 2020. We'll start with health check here. All right, so today's price action was a nice tight little doji here, one full step up from the previous 2 days of sideways hesitation. So today was a gap up a little, down a little, closed where it opened, but still another positive sign. We were able to stay across the Bollinger Band mean, made a new 10-day high. You can see the 10-day range between 282-ish and about 243.8. The RL10 crossed the Bollinger Band mean today. We have a swing low, belly of the RL10, the RLXD. We have the 30-day low here also at the swing. We have a 10-day low. We have, what is that one? That was the previous PSAR flip. We have basically the hump of the 10 and a 2-day low. That's really the same one. Monday's open back at 258. We got a pretty good gap away from that. On the upside, we have the 10-day and 1-day high. Z1, fair value at 304.5. Z2, Z3, we have the peak of the RL270 here at 325. Hump of the dragon, hump of the 10 up here around 338. Then the previous Z3 excursion up here at 344. Price closed around 278, so we are now less than a 20% sell-off, so we've already come back about 22% off that swing low, and now we're only about 18% below. This is probably our last day in spring, as we are now testing the summertime in the MACD Four Seasons. So all other things being equal, this is 3 pretty good days in a row. A failure to fail further, holding support at the Bollinger Band mean, and then moving towards the far side of the river. So that's all looking promising. Inside the stack of symbols we have, so we have the S&P in spring at 1.5%. The Dow was up 1.2. Healthcare, treasuries, tech, and Brazil all less than that. U.S. steel lagged the Dow, which lagged the market. That was one of the reasons I got out of that thing today. We'll take a look at that on the intraday. Walmart had a nice turnaround today. We're going to see that one when we look at when you see the speed run. The speed run is already posted, and the closure report already posted at Patreon, so I'm not going to cover too much of that. Oil got smashed again today. Chevron, Cat, Cisco, and Energy down here at the bottom. Moving up the stack, Clean Energy and EFA were better than the S&P. Silver and timber at 2.7, 2.8 were better. McDonald's and Home Depot, clear Dow winners at 3.4, 3.5. The Russell at 4.79 outperformed the triple Dow at 3.8. So the Russell was really a strong vote up. And then we had finance, real estate, Cliff, wheat and precious metals was just amazing today. And then the inverse, triple inverse oil. So just a couple things I want to cover before I get too much further. So last night I was feeling froggy, and I realized what I need to do is I've got about 20,000 case studies of live trades from the last 25 years, from workshops, live trading seminars, my own trading in my trading journal, and it's really the documented life of a trader over the last 25 years. And so I just finally realized that what I need to do is not only have some of the introductory courses, but to have some focus courses as well. So I made about 10 of them last night. Nothing better to do. So as an example, there's one I built called Tortoise Quizzes and Case Studies. Case studies and quizzes that serve as checks on learning for key concepts over the years. So there's 990 case studies in there waiting to be mined and studied. Each one of them is a one-pager, a screenshot of an important moment in a trade that showed entries, exits, setups, frames, lessons learned, and all that stuff. And just in no particular order, this is just the order they got loaded in. So the one from earlier this week, Quiz 20200409X Series 5, well, that's the fifth in a trading series of that day of deep dives into U.S. steel on the intraday trading on April 8th, 2020. This one, Quiz 2019-1024 SPY RLFF technique, is how to use the regression line fractal framework technique in estimating potential moves in symbol SPY from October 24th, 2019. This one, 2020-020320, was Spice Liftoff, was an example of lucking into an explosive upward move in Virgin Galactic on March 20th, 2020. This one, Quiz 4 Owl Frames, shows 4 examples of owl trade frames for preparation. Quiz on Coaching 2017-0317 Resistance Lesson is a coaching lesson on the use of support and resistance for March 17th, 2017. This one is a focus on a specific technique. So whereas the other one looks at a bunch of trades in practice, there are a dozen courses now on focus patterns like RLCO, the owl, MACD, the regression line crossing the dragon, sideways quiet channel, WMB3, collapsing dragons. Each one of them has a collection of case studies that are focused strictly on a particular technique or a system or a strategy. So this one on just the RLCO patterns has 394 case studies. So the first 3, the RLCO frog relationship, is a conceptual case study that shows how to use the frog box in conjunction with the RLCO to get the best of both worlds. The RLBB concept flashcard is a flashcard that illustrates how to integrate Bollinger Bands and regression lines into a sense-making framework. The RLBB concept flashcard 2 example from 2016-0726 in Freeport Moran is an example of how to use that framework on a particular trade frame that a student put in. 2015-05-2 Coke swing exit is how to use the RLCO when making an exit on a swing trade. These two in the middle, ES2 and ES3, are how to use the RLCO in futures trading on the ES contract from 2013 September 9th. The 2013-12-18 silver weekly frame was a long-term swing trading frame on a weekly charts in the silver ETF. And so in the focus lesson on RLCO, there's 394 case studies. So there are hundreds of case studies grouped by category in that learning management system that allows you to kind of zoom in. Now, what my commitment to you to do is this. Um, when you're enrolled in those courses, if you pull one up, it should be obvious to you what the lesson is. And if it's not, then send me an email with your question, and I can record an answer and attach it to that slide, and it will improve the lesson for yourself and for others, and you'll get feedback. So active collaborative learners will get rewarded by getting more detailed follow-ups. So this is a way, in my view, to approach the whole ecosystem of learning in a systematic way, because there are a number of courses that deal like with basic coaching in psychology, the use of indicators, the boot camp, and adult learning models that show us how to develop expertise. Then there's some that are focused on systems and strategies. Then there will be these focus areas. And so now we have the ability to progress all the way through, and this is an ecosystem about adaptive trading, and the learning management system is an ecosystem for adaptive learning. So I take the position that the market is a workshop for learning and self-discovery and self-expression while getting paid. So learning about the market, this is the ecosystem that helps us do that. And what it does is allows us to lay out all the work that the folks in the community of practice have done over the years to build proficiency. So I'm really excited about the way that thing is unfolding. And very, very manageable, very easy to operate. Okay, so that's what I wanted to say about that. All right, we're going to go through some of the intraday trades today. There were some elements of visual box trading. So this was the first one, and I made some decisions early today. One of them was to cash the swing trade in U.S. Steel. There was still a residual that was left over. This one was a big gap up to $7, and then started rolling over, and it was rolling over faster than the Dow. And it just felt to me like, as overextended as that has been, I wanted to cash that because it did not feel strong. And I didn't want it to come all the way back to 675 where it closed yesterday. I wanted to keep that extra 27 cents. And this thing had gotten as high as 7 yesterday and couldn't hold it. And so when it gapped up and then started selling off, I just decided that enough was enough. And that yesterday when I rolled from U.S. Steel over into the Dow for intraday, I kept the U.S. Steel, but this felt like an appropriate time to exit that one. So in this sense, the exit at 7 is an intention to protect the move back to yesterday's VWAP, or closing the gap. Getting back to here would be the least surprising move, and that was 25 cents that I don't want to get back, which is like a 4% move from here to there in terms of dollars, right, in percentages. Meanwhile, UDOW had started to move up at the same time that U.S. Steel was moving down. UDOW had also gapped up. Here was yesterday's VWAP at 48, and it had closed at about 49.5, and then gapped up to open at 52. And so I was really looking at the difference between those two VWAPs. The starting VWAP of the day here, and then yesterday's VWAP there. The fact that yesterday closed higher than the VWAP felt like an indication that there was more room for it to continue to go. So when I started framing this trade, what I took a look at was, in that first 5 minutes, I drew that yellow box. Let's see if I can zoom in a little bit for you. Yeah. So here was this was yesterday's VWAP, and this was today's VWAP. And so the first 5 bars, I just draw a box around that, and that's the opening range 5 minutes. That's the high of the first 5 minutes. That's the low of the first 5 minutes. And so at about 10 minutes in, it held support at the dragon and the VWAP, and the PSAR was rising. And when it took out this hump of the dragon, I went ahead and entered at 52.12, and I put my stop here at like this is about 51, probably 40, so maybe 70 cents of initial risk as safety. And as long as it's above that VWAP and going, then I like that. So that was the combination decision I made there was to go long UDOW and then to cash out of U.S. Steel, reduce my span of control. Yeah, so a few minutes in, so this was at entry at 52.12, and our stop was down here below the belly of the dragon, basically below the VWAP. And we get a nice move up, pulls back, finds support at the PSAR, and resumes again and crosses the dragon. So that feels really good. And it's at about this time that I would be taking my stop and bringing that stop up into here. So during all of this other time, my stop is probably like right about here. And then drifting along, and then it finds that support and goes. No lose plus dinner for 2. If I want to get tighter and just underneath the dragon, I can go there. So that works pretty nice. So now I feel that's for me the biggest moment of relief in the trade is when I can get my capital risk out, and now it's just a science project of how much is this going to let me keep, or how much am I able to keep. This next one is Simon Property Group. So I have been so wrong on the macro on this one, it's just not even funny. Harder to be wronger than I have been. So what I want to show on this is a technique for like visual box trading again. Yeah, so there's a course on visual box trading that I built last night that has about 200 examples like this. So I just go back to the noise history of this thing. This is how far it was when it's just kind of oscillating along or idling, and then it closes well, and then it gaps up to here, and now when it moves that far off the bottom and keeps going, I just buy it, and now I put my stop in just below the VWAP right here. So my initial risk on this thing, is maybe $1. And then it moves out smart. It never even looks back. That's me making a choo-choo train noise. The second position, when I've got 2 execution R's in hand, I just buy another one. When it moves up an execution R and then a second R, I put a third piece in, and now my stop is here at the PSAR. And now what I'm looking at as this starts to roll over, if this gets above 78, that could really be awesome. So this was nothing more than just trying to estimate the size of that minimum manageable risk box. That feels correct. It moved that far off the low. It was the strongest symbol in the stack, so just buy it 5 or 8 minutes in. That's basically a leapfrog or a hybrid frog, and then money management at 2R in hand, buy another one, buy a third one, and now the trade is framing. Now we're about 30 minutes into the day, and you can see instead the first one was just straight up, and then there was one pause and up, so that causes the Bollinger Bands to compress a little bit. And that's what it looks like with the boxes on the first two. So this is the one with 3, and here it was with 2. Oh no, I'm sorry. This is wheat and precious metals. This is the same thing. You'll notice the same technique. Here's the minimum manageable risk box. It moved that far off the low, so buy it. Put my stop in at the VWAP. So I'm buying that at 30.40 with about a 40-cent risk. It moves up 1, 2, still going. Buy a second one. When it gets up, it makes a little pullback, holds at the PSAR, and starts drifting along. Now I've got my stop right underneath the PSAR. If it gets out of this yellow box, I'll add a third position. Lather, rinse, repeat. I come down here and look. We've been in the summer, now we're in the fall, so I still have a long bias, but I'm very careful and cautious about locking in the gains that I have. So that's wheat and precious metals. So this morning, I shift away from U.S. Steel and into UDow, Simon Property Group, and wheat and precious metals. Now this is later on in the morning, and we've got this is SCO, that triple inverse, excuse me. So here's the size of that box. So I've drawn that black box around so you can see a little easier. That's the size of this box. So now we're about, we're at 10:45. So we're a little over an hour into it. And now we get we had a sideways quiet channel, a breakdown. That was tradable. I didn't, but I had other things going on with wheat and precious. And so right around this time, those other moves were all kind of chilling out and rolling over. So I went down and found the things that were at the bottom of the stack, which included SCO, and it had made a unambiguous move down, P1, and I just bought the RLXD because it moved a minimum manageable risk box off the bottom. So in this case, about $1. It had moved $1 off the bottom, so I bought it. It moved up, held support at the Bollinger Band mean, took off again. I buy the pocket continuation, which is, notice that it's crossing the VWAP at this time. It moves up another box, so I move my stop from here up into here. And now it makes a little run up to Z3 and pulls back a little bit. So right here is where I am moving my stop up to ensure that I've locked in gains on my second position. So I'm not going to lose any money on this one. And in the first one, this is like 2 execution R in hand, 2.5. So if I get hit at this exit here, that's going to be about 3 execution R. So that's a good position to be in. Now I take a look at this and say, well, what we have is kind of looks like an owl. The owl entry was probably right up in here because now the RL30 had rolled up. So I got a little bit in a few minutes ahead of the owl. So now I'm trying to decide, now that I've got 3R in hand on 2 positions, I'm trying to decide where do I want to add a third position. So I could add one if it simply just holds support here and departs. I could enter at 1. I could enter at 2. I could enter at 2, which would be taking out the hump of the RL10. If I wait to enter a third position at 3, then I'm playing the Z3 excursion. So if the price had moved up past that where that previous Z3 line would be, then that would feel like an amazing move as part of this second leg up. Or I could just wait for the previous Z3 excursion. So I really have a choice as 1, 2, 3, or 4. So here's just a quick quiz to yourself. I'll pause for 5 seconds and then say, this is a nice problem to have. And the management of the first leg of the trade is designed in such a way that it gives you this kind of a problem to have. That the worst thing that happens is that maybe it just fails right into your stop and your 3R in hand. But whenever you add that third position, your stop will never be lower than this red dot, and it'll probably be higher depending on how long you wait. So go ahead, vote for yourself where you would put your entry in. All right, so what I ended up doing, the scale's a little larger on this one. So here was that first one, the second entry, those two up, and it pulled back, and then this was where I posed that question: where would I want to be? I waited till it took out the hump of the RL10, so I took entry number 2. So I got long. It went up to 3, didn't break, rolled over, broke the PSAR, so I exited. So if I had gotten in at 1, then I would have at least, scratched on that one. But I gave back a fraction on the third one. But as it was, this one got in at about 20 and a quarter and sold at about 22.75-ish. So it's about $2.50 on $1 risk. And then this one goes from like 21 to maybe another 1.5. So maybe 4 execution R after you factor out this one. So this was a case where, I had framed the certain trade. I made my decision to enter at 2. It didn't work. If this was going to work, it should work immediately and just really break out and go. But it didn't, so exit. This was a detect, decide, deliver, and assess methodology. I detect the opportunity for a third position. I decide how I want to play it. When it goes through my decision point, I deliver the entry. Then I assess it and then decide when to exit. And then after that exit, I immediately get back to the 0 state. Nothing to see here, just move along. It's now about 11:23 in the morning. That's just the next trade. Move to the next trade. So this was, this is the rest of the story. So this is that morning trade we just looked at, and this was where I put the third entry in, and then it exited on the RLXD here. So it locked into a Z3 compression here of about $1.50. It broke down here below the RL10, and I suppose I could show that we tried the other day. So. So this is one that felt pretty good getting started. Sorry about that. This one came all the way down. This was a collapsing dragon off of that belly of the dragon, the belly of the 10. So short. It comes all the way down and tests the rising RL270 and the VWAP, and then gave a 1, 2, 3, 4 immediate rejection. So I took a fractional loss. It rolled over at the Bollinger Band mean and started failing again, so I got short again. Here's a fractional a fractional gain that offsets the fractional loss. The VWAP is still in support. The two Z3 excursions are about the same price level. It gives me a tighter Z3 pinch and then starts breaking out on a PSAR flip. And so there's a 10, a higher low in the 10. So I buy the departure of the river here. It's starting to feel pretty good, and then pulls back. And at this point, I have to cash that at the Bollinger Band mean so that this doesn't become a losing position. I could have been a little faster, but it probably doesn't make that much of a difference. It's getting into the lunch hour anyway, so they're not really... Yeah, this is trading for the broker right now. Get another Z3 pinch. Now I'm very interested. Really tempted to buy that one there. But to be honest, the three chops in a row, I didn't really have the will to do it. It's the one that got away. So I had at least the fortitude not to chase it. It rolled back, made a higher low in the belly of the RL10. So I bought the pocket continuation when it took out the previous hump of the 10. Feels good. Just get paid. Bank on a break of the PSAR flip. Missed one. On a better day, I would have had this one and made bank again. Just didn't have the will. So now we're getting closer to the end of the day, and I'm running out of gumption here. Now this is on a better day or earlier in the day, a high, a lower high, and the dragon rolling over and crossing the Bollinger Band mean. That's a pretty good short right there most of the time. But with only that much time left in the day, I just didn't have it. And now I'm really regretting that I missed that one. And I just let it close out into the day. Okay, so those were the trades for today. So you will remember that yesterday, was it yesterday? It was something like or maybe the day before, there was a 45R in SCO. This is SCO. It gave us a little bit in here, but it didn't have that same kind of just explosive runaway move on that second day. So we got paid nicely in here. Mucked around, wasn't on my A game and missed that, but still got paid here. And then I really was not that altogether on SCO, but there were a number of swing trade frames that you'll see in the speed run on Patreon there that has there's probably 10 or 15 swing trades that we got started in. The one I want to show, if this will, I didn't have time to mark up, but this was from really a swing perspective. And this one is this is Walmart. Yeah, so Walmart was nice today for swinging, and the reason was, it's not going to let me do that. And the reason was it was a big gap down, and then sold off, and so there was an entry down in here, like at 120-ish. I'll try to draw that in here. So this entry in here around 120 was nice as a swing, and then it held all the way through the day pretty nicely. So that worked out pretty nice. And then I want to show it on the what that daily frame looks like. If it will let me. No, it's not showing. It's not repopulated. Anyway, that's on the speed run, which is at Patreon. The other thing that I would just notice for you here is one of the things that we can get from that swing, looking at swing trades here. So I've sorted it by daily, summer. So Cat, Cisco, Japan, Walmart, Wheaton Precious Metals, and healthcare are all in their 4 seasons are now all in the daily summer. So these are relative to their previous sell-off. These things are in better posture than all the things below. Now, not all of them did well today, but like Wheaton Precious Metals was amazing at plus 8%. And so that closed at 32. And if you will recall, yeah, so we were into that thing around 30.50 and around 31, and it ended up closing up here at like 32. So Wheaton Precious had a nice orderly move all day. All right, so that's I think everything I want to cover. There's a question in there. Just a minute. Boy, I gotta change the font so I can read that. So the question was, Luke asked me, when I have more than one position on at the start, do I sometimes cash out of the extra scoops at the RLXD and then keep one? I usually don't. A lot of times I end up regretting that because I end up putting one right back on, and I'm so quick to put the re-entry on there that I usually just like to get all out and just relieve the pressure, because as I start adding scoops, I can really feel the tension in me building up, and so when there's a piece of evidence that says, this is done, I always feel like the next thing that's going to happen is a lightning bolt failure, and so I don't even want to try to sell 2 out of 3 and then try to sell the third one. I just have my finger on the trigger ready to get all out and then get to the zero state fast and then put one back on, and that has basically the same effect. And what it will do is protect me against the few times that there really is a lightning bolt. But that's not a bad idea, and it's similar to the idea of holding a piece from the intraday trade with a wider stop for the swing. All right, so the second part of your question is, when I just use the RL2, could I use the RL270 as a trailing stop? Yeah, nothing wrong with that. I actually think that's a pretty good idea for the for swing trading, because one of the things that you'll notice is, like on this one, let's see, like on Wheaton, this is still kind of early in the day, but of all the things that you could use to trail it with, like the Dragon, the PSAR, the VWAP, the RL90, and the Bollinger Band Mean, maybe the Z1 or the Z-2, the RL270, the long-term fair value, is kind of a nice relaxed way, especially if you had a couple extra positions on and you cash them, you just wanted to keep that first one on. This one will normally, by the middle of the day, will have gone up towards the previous high, so that it almost acts like a relaxed time stop or a relaxed PSAR. So I don't think that's a bad idea. I think that has some merit. One of the reasons I like to have those extra indicators on there is that lets me see what's happening on the higher time frame. So like in this example, you have the green line is the RL90 and the purple line is the RL270. That's like the 1030 for two higher time frames. So if we looked at the 10-minute charts, that's where the RL10 and the RL30 would be on 10-minute charts, is at those price points. So I don't mind the I don't mind that idea at all about using the RL270 as a relaxed trailing stop there. So yeah, that's not a bad idea. Any other questions? Hearing none, I'm gonna call it there. We're about at 8:45 there. So, God, where's the time go? I'll get this posted pretty quick and finish working my way through the daily report. I've been having trouble for some reason with the quote server feeding into Excel. It's hanging up like on the last day, and so it's giving me incomplete signs. So the daily report's been coming out a little bit later. It's a little frustrating, storming around in the basement office like a wild animal. Linda had to lock the door on me. So anyway, that's everything I got. You guys take good care. We will see you in the chat room. Oh, wait a minute. There's the yellow belt quiz. Oh yeah, let me see if I can if you don't mind. I'll see if I can. Could it have been that one? Yes. Good call. Yeah, so here's these are the things that are in my mind that I'm seeing at position number one. So at position number one, what I notice is that we're in the winter. Looks like the end of the winter because we're just going to have the RL10 bottom out, and that's what I'm noticing here, that it bottoms out between Z-2 and Z-3. It bottoms out, and then we're going to get a 1, 2, 3 that crosses the VWAP. So it bottoms out near the VWAP. At 2, I notice that the PSAR flip occurs, and that the price level on the PSAR flip is once again right where the RL10 bottomed out. So the fair price and the PSAR flip happen. That's like a confirmation. And meanwhile, the RL10 has crossed, so now we have a P1 and we have an RLXD happening at 2. So at 2, there's a lot of things going on. And then 3, when I take those two things in together, that forms like a little complex of reasons to believe that this is a swing low. That in the next 6 or 7 bars from this bottom, it hasn't failed. In fact, we got the PSAR. So I take that as a provisional low. At 4, I want you to notice. So one of the things I want you to notice, I didn't have a number on this, but we are on the hourly charts. So that means there's like 7 bars per day. But the look back periods I had marked off in 10. So at 4, what you have is a jump from the end of one day to the gap opening. That's the move from 4 to 5. So 4 is where the PSAR, where the VWAP and the close and the middle of the dragon all happened on the 3rd of March. And then the 6th of March was the Monday morning gap up opening. And then you notice the VWAP rapidly race north across the Bollinger Band mean, going from this rising PSAR to the opening VWAP, if you will. And that's what I'm looking at 5. So I marked that price level here at 220 as an important support level. That's where, having all weekend to think about it, that's where guys were buying it at 220. Whereas what they closed it at was 210. So that's a 5% overnight over the weekend gap up. And then an orderly move into the close. And then at 6 is another one of those, a gap up. The PSAR is, the VWAP is not quite all the way to that gap. So this now looks like a gap up and a resistance level at 6, because that's a Z3 excursion at the, so it opened outside Z3 and then sold off and then settled into the new VWAP. So now this line from 6, 7, 8 to 11, which runs through the PSAR flip at 8, looks like really strong resistance at 235. 9 is the, at the time of this day, at this time, this combination of 6, 7, and 8 is a cluster for that top level resistance. So 6 was the Z3 excursion, the rising Z3 higher than the VWAP. 7 was where the it rolled over, the RL10 rolled over at Z2, and then the P1 happened, and then the RLXD down here at 10, which was a test of the PSAR, and then a PSAR flip. So from 7 to 10 was the rejection of this resistance level, and then at 10, what we have is a another gap up, small gap up opening, and now the VWAP finds support at the PSAR, and the RL10 finds support at the 90, and now everything rolls up and has a strong move into the close of yesterday to close right at the PSAR, ready to flip if there was a gap up, and there was a gap up today. So that's a very strong close yesterday that tests the support level at 11. And then 12, to me, is this region of uncertainty, this buffer that is the width of the dragon. So if this is going to be an upward move, this region of 12 should be strong support. And it's anchored by the RL90, and it's just below the edge of the river. So this looks like strong dragon support to me, pending this move to the upside. So if it breaks out above 11, I can buy it at 235. Then I could take my execution risk anywhere in region 12 and be justified, but certainly not lower than the PSAR flip here. So that's 12. 13 through 16 is the sequence of 13 is the transition from winter to spring, which happened here at the PSAR flip. So that's spring, and the RLXD, you can actually buy that with a stop at the PSAR, and then you'd be in at 210, and you never got hit. 14 is when that spring has gone through the Red River and then crossed above the zero line, and now the summer starts right here after that nice gap up. And now that's when you want to be long and strong, and so you get all that move. 14 to 15 is you enjoying the summertime. But then this is the warning that at 15, summer is becoming fall. At 16, the fall has now, even though it's testing here, it's right back at the edge of the Red River. So this is really a critical state that if this continues to go, then there's a release of pressure, and then it will have been summer, fall, summer, which is an instant long. So that's 14, 15, and 16. Number 17, the range stat, I don't have the number right in front of me, but whatever that number is, you would simply take the quiz was, if it opened at today's close, 234.33, you would simply find the range stat number on the daily report, add it to 234.33. That would be the upside maximum reasonable move. Let's pretend it was $10. So if it's $10, then the upper limit would be 243. Then the lower limit would be 223. And then the trick on that is, no matter where it opens, you just start with the open as simultaneously the high and the low of the day. So you take the open plus a range stat as the upper limit move, and range stat, or the open minus a range stat is the lower reasonable limit of a move. And then that's what you, that's the piece of training that talks you through there. So that was numbers 1 through 17 for that yellow belt quiz. Okay. Victor Huffman submitted a set of solutions in writing to me. I thought he did a pretty nice job on it, so I will post that into Patreon as well. Okay. So thanks for your attention.